Hello everybody, welcome back to my channel Trading Secrets. This channel is for entertainment purposes only. For those of you who don't know, my name is Ali. I have over 20 years experience teaching accounting, economics, business and law. Through this channel I'll be providing some stock analysis and a quick update on the $1 Million Challenge. So if anybody's not aware of this is a journey of an investment of $1,000 to a return of $1 million over a period of 3 years using a strategy called compound return investing. So the objective is try to get 201 trades, each with an average return of 3.5%. It's not 201 consecutive trades. We do take into account losses. So for further details about how to join us for less than $9 a month, information is available in the description below. In today's video, we're going to be following on from the previous video where we looked at the problems that currently are going on with Meta Materials, and we're going to be looking at an alternative path to potentially look at the current board and bringing them to account from a legal point of view. And then we're also going to be looking at Meta Materials and a huge new $9 million RICO claim. So stay tuned for that. And before we get started, let's have a look at what's happening in the market. So first headline here, we can see from Market Watch that in the previous week stocks were wobbling after a rotation from the big tech, leaving the rally in question. So it was a very difficult week. So if we look forward to the next week, that we can see it is an important week with regard to GDP. Second quarter due is on Thursday. Jobless claims are also due on Thursday, but I think the big one that everybody will be watching is on Friday, when we're going to get news with regard to core PCE inflation. And from Market Watch also, we can see that two Magnificent Seven companies are reporting this week, and only one will likely be amongst the biggest profit drivers. So the ones that we're going to be looking at especially include Tesla and Alphabet, i.e. Google. And if we have a look at the other important stocks reporting this week that we will be looking at, and there are a number of prominent ones here we'll be looking at, including Coca-Cola, Spotify, Visa, Alphabet, Tesla, Ford, amongst many others. And finally, I'm going to share with you news that was breaking just at time of editing. That was with regard to President Biden, and the question I'm asking is, will he remember that he has dropped out? Just following on from the previous video looking at Meta Materials, and one of the problems that was identified is where they were selling the assets very cheaply. So one example was when they sold Opta.Npo for approximately $825,000, where the company previously paid approximately $48.5 million. And what Richard has stated is if you believe that the board, or should we say the current board, are breaching their fiduciary duty, you can get 10% of issued shares together. You have an opportunity in Nevada to pursue a change, obviously not legal advice with a K. And I'm assuming that is a message also to George, who holds a significant amount of shares. So his shares plus a number of other shares to account for the 10% should give this opportunity. And what MetaHead has posted with regard to the potential delist for Meta Materials, it's on the regulators and Congress hands. They've known for 600 days now and nothing has changed, tagging in MMTLP as well. No transparency, no share count, no interest, no to investors when shorts are still borrowing and also still obviously unbalanced. So I think the key question here is, can we have a share count? So now I'm going to share a post from RareDD, who's reminding us everybody with regard to the SEC, and according to the SEC, the Atlas Group with the TRCH merger pumpers, but obviously this case was dismissed. So in terms of an important analogy and reminder here in terms of why this case is important for the MMTLP fiasco, is that the SEC used CAT data to investigate and filed charges against the retail investors who allegedly pumped and dumped multiple securities, including TRCH. And remember, that was a predecessor of MMTLP. So FINRA has investigated the issuers of MMTLP and MMAT via the blue sheet data for fraud and manipulation in these allegations of the Atlas Group. So they will have that data. The SEC have also brought this case against the retail investors, and the FINRA have also been involved, but they have not resulted in any charges. So the question here is, does this not give the impression that there may have been some type of fraud or manipulation involving the tickers, but the evidence, i.e. the CAT evidence and the blue sheet data, doesn't support pinning the crimes on retail investors, but rather potentially could pin the crime on regulators, and what they are doing is potentially ignoring the evidence. So with regard to this evidence, that they are ignoring. Nobody else, including Congress, allegedly getting their eyes on that, including us as retail investors. So they are the only ones with the eyes on that blue sheet data and the CAT data. So let's move on to Gregory here, who stated, tagging in Ralph, here's your boy Gary Gensler admitting that the trading halt is there to screw retail investors, to protect criminals, the same criminals that destroyed the 65,000 MMTLP families that you said you helped along with RICO. So here's a quote from Mr. Gensler himself, and he states here, it does concern me that retail investors were shut out during a fateful time, but again, there's a balance. They had to protect the clearinghouse as well. So in his statement here, it looks like he's prioritizing protecting the clearinghouse. Let's now look at the $9 million RICO claim for loss of profits, and what Scott has posted here is here is the link to the first amended complaint, and also page 41 has some improved finger pointing. So we're going to have a look at some of these key points, but we can see that this is in the United States District Court in terms of the District of Vermont. Scott is looking for a jury trial, and in terms of the defendants, the first defendant identified here is Ari Rubenstein, also of GTS Securities, and they are also here as defendants. We also have Charles Schwab, who will be his broker, and the organisation of the SRO that conducted the U3 halt, which is FINRA, and also Gary Gensler, which oversees FINRA, and the person who could say has key overall responsibility as the cop on the street protecting investors. So let's have a look at the introduction to this complaint, and what Gary has stated here is the action is brought by Scott. What Scott has stated is the action is brought by Scott to recover damages for violations of the Securities and Exchange Act 1934, the Computer Fraud and Abuse Act, and also RICO, which is the Racketeer Influence Corrupt Organizations, and I'm assuming that will include the SEC, FINRA, broker-dealers and others as well, including market makers. And he's seeking a writ of mandamus against the SEC Chairman Gary Gensler, and also seeks the appointment of by the court of a special masters pursuant to the Federal Rule of Civil Procedure, compromise of a team to make use of AI, artificial intelligence, and potentially look at overseeing the 2 days of trading in non-voting Series A's preferred shares of Meta Materials. So it sounds like he's asking for a situation to recreate the 2 days of trading using AI models, obviously approved by the court, to identify how much potentially losses were, and these could be identified by looking at prices of MMTLP in terms of how it would have gone according to AI. But obviously in terms of a real situation, that is something that we were denied. So let's have a look at the damages claimed by Scott, and he states here damages sought for each individual RICO counts 1 through to 6, and he's entitled to cover threefold damages, which is obviously sustained and the cost of the suit as well. So the compensatory damages that Scott is looking for, $3 million, and that is for loss of profits that he could have potentially made by selling his shares in MMTLP. So there is now going to be a claim. The claim is going to be for triple damages as allowed under 18 USC 1964, which mathematically will get Scott $9 million. Attorney fees to be determined, and I can see in this complaint that Scott has not identified any attorney, and we can only see his signature at the bottom. So let's have a look at the final part that I'm going to share with you. And he states here, following on from point 4, there is an understanding in terms of the statute of limitations. The date here that Scott is identifying is 8th of December 2024. Realistic due diligence discovery date of the fraud according to the statute of limitations for that, and racketeering, which was the U3 halt, as well as the inability for MMTLP members to get any reasonable answers so far from any of the SROs. So he is using a ruling stating previous cases in this complaint as well. And number 6 here, he says, in the event that trading is not ordered to be restarted, he's requesting all damages figures outlined, which basically amounts to $9 million. And this will be a demand for a jury trial, and I think if we get some reasonable people on the jury who see through obviously the nefarious actions by the market makers, broker dealers and the authorities, then I certainly hope they give Scott and all the other members of the MMTLP community justice that we deserve. And the final post I'm going to share with you here is from Curtis, and he states here he's had 2 conversations about the timing of these coincidences yesterday, and that is in response to MB, who's posted he has a story about Charles Schwab, TD Ameritrade and the cyber event with regard to crowd that we saw. And finally, let's finish off by giving a quick shout out to the weekly watch list. And the previous week called out stocks such as AEON, and I think on Monday that was up well in excess of 100%, closing also up in excess of 23% on the week. So always a good idea to protect your profits where you can. LPA was another stock that we called that was up 77% Monday to Wednesday, and also closed up in excess of 16% on the week. ZAPP we have been following and also been featured a number of previous videos, so go ahead and check those out. That was up 45% Monday to Tuesday, and also up 5.3% on the week. APPN, that was up 3% on the week. QS, another stock we called, that was up 16% Monday to Tuesday, then closed level on the week. TTSH was a stock that we called also, that was down 3.8%, so not all calls are successful. If you would like to get the next copy of the weekly watch list, which will be shared prior to trading on Monday, details are in the description below. Thank you very much for watching. Please stay tuned.